All right, well, welcome everyone. We are super excited because we are celebrating the Massachusetts Affordable Homes Act finally going into effect on Sunday. So making ADUs by right. I'm sure Tim will talk a lot more about that statewide. So to start, my name's Avril Williams. If you haven't attended one of our events before, I'm the Director of Marketing for Backyard ADUs. I'm in charge of all the social media, the emails you get, the events we put on, and these webinars. So it's great having you. And then we have a panel tonight. We're going to be talking specifically about how to finance your ADU. As Tim had mentioned, it is one of our most popular topics and one of the things that people reach out to us about a lot. However, we don't provide financing directly. So we have brought some experts on. With us tonight, we have Charlotte Green. She's with the Cooperative Bank of Cape Cod. If you are on Cape Cod, she's a great option among the many. So I will put everyone's contact information towards the end of the event. We also have Jim Kelley with Bangor Savings. They are primarily in Maine as far as their branches go, but do have a mortgage office in Andover, and Jim is located in Newburyport. So if you're on the North Shore, Jim would be your guy. And then we also have Michael Pill Esquire, and he is here to talk from an attorney's perspective when it comes to finance and ownership specifically, and all the rules specifically within Massachusetts. Oh, and Tim's here. Everyone knows Tim by now, I think. Tim O'Reilly, he's our director of pre-construction, located down on the Cape mostly, but travels all over statewide. And if you have any questions about ADUs, or the process or the build or construction or cost or any of that, Tim O'Reilly is your guy. Michael, if you want to take it away just for a moment here.
Yes. I just want to note that I'm licensed in Massachusetts, and every state is different when it comes to ADU governing law. So if you're not in Massachusetts, you need to talk with an attorney licensed in your state. Tim, for example, can refer you to a Maine attorney who they've had on a webinar in the past. And if you're in a different state, certainly I think you can deal with backyard ADUs, but you need to talk to a lawyer in your state. Thank you.
Yes, I also need to say a few things about tonight. I said them earlier, but not before everyone started. That we are keeping the chat closed tonight, so just a little reminder about that. If you have a question, we will be taking questions throughout the entire event. If you drop your question in the question box, we will try and get it answered as it comes up as in the topic that we're talking about. And any questions that are left over at the end, we will try and squeeze in to get answered. So if you put it in the box and we don't answer it immediately, we see it, we haven't forgotten you, and we will circle back to it. As you noticed, the event is being recorded. So 1 week from tonight, that will be put up on our YouTube channel. If you go to YouTube and hit subscribe, if you're wanting to rewatch things tonight, it'll notify you every time we put up a new event. So that's an option as well. All right, I think that's it. Go for it, Tim.
Great, thanks, Avril. Well, as Avril alluded to earlier, the Affordable Homes Act, which the governor signed in August, is coming into effect here very shortly. So there's been a lot of chatter and a lot of changes, and we're excited tonight to talk about financing, because unfortunately, one of the things over the past couple of years, as we all know, is costs have gone up. And so as folks are looking for a housing solution that works for them and their family, financing is always generally a piece of the puzzle. So we're excited to dive into the details tonight to explore sort of what's out there and what's possible. So I want to start and sort of frame the first piece here to just talk about these ADU specific products. And that's why we brought you here, Jim and Charlotte, tonight, because you're both experts in this field. So maybe Charlotte, you could kick us off. Tell us a bit about your ADU product, how it works, so folks can learn more about it.
All right. Thank you, Tim. Thank you, everyone, for being here today. I'm really excited to be talking about ADUs and so glad to see them going into place by right across the state. Cape Cod has been leading the charge with ADUs for a little while, where a lot of our towns had voted in ADUs by right over the past few years. So seeing that need in our community, we developed a product a number of years ago for financing ADUs, either in a standard first mortgage position or as a home equity line of credit or home equity loan, which could sit behind your existing first mortgage. So these are available through the Cooperative Bank of Cape Cod for any primary residence or second home owners. That was in line with the guidelines that we saw on a town by town level at the time. People can use those to convert spaces in their house into accessory dwelling units or create a freestanding accessory dwelling unit, which we're finding with a lot of our old houses is the preference, because then you don't have to touch the electric or the plumbing or anything inside of the house, which can be a nightmare in terms of upgrades and bringing things to code. We created the product because we saw the need in the community and didn't really see a super viable outlet within existing product offerings to help people tap into funds to finance their accessory dwelling units. So we looked at using projected rental income and future values for homes once the accessory dwelling unit is added, giving a little bit more financing flexibility. We also increased our what are called debt to income ratios. So the amount you can borrow versus your income and your other debts that you might have, as well as using the projected rental income from those units before they're built, which can help people offset their mortgage payment or their home equity line of credit payment in order to help qualify for a loan or improve affordability.
Yeah, I know when we first started chatting, that metric has really moved, right? It's now, it started around 250,000 and now is close to 400,000 or thereabouts.
Yeah. We increased our loan limits to 450,000, just hearing from our community and people who are financing these that our original loan amount, 250,000, just wasn't fitting the bill as costs have increased. And sometimes people need to pay off their existing HELOC or existing mortgage with these loans. So we wanted to be able to offer flexibility for that.
Yeah, that was exciting to hear. We've been publishing our pricing guide for a while now, and it was like, oh man, we're sort of sometimes finding a gap, and then with that increase, it's given people a lot more options and flexibility. Jim, do you want to take the torch and tell us a little bit about, you know, who you are and your ADU specific products and how those work and why you guys created them?
Yes. So it is Jim Kelley. I've been doing mortgage lending for 33 years. Been 7 years at Bangor Savings Bank, which we do lend all throughout New England. And our ADU loan is basically a second lien on the property. And we will go up to 85% of the combined loan to value. So that would be the first mortgage on the primary residence, and combining that with the lien that will be on the second ADU loan and on the completed value. So, and that's what we're doing, the market value as completed value. We have the 20-year fixed for an addition, and then the 30-year fixed would be for a freestanding ADU in the backyard, maybe. We figure on right now we're at 8.25 on this loan. We also we've had the construction loan in place for years. So we rolled out the ADU portion, and we have a third party that basically, I like to say he's the referee between the bank, the contractor, and the borrower themselves. So he sets up the draw schedule and tells us when the payments will be made, and we try to keep it on a 6-month basis for the closing to the completion. So it looks like it's really going to be a great product to have, a great addition to a house that would, you know, like you say, it could be great for families transitioning to a small unit. And like you say, everybody loves new construction, and that would be a big part of having the freestanding in the backyard. So I think that's about it. If you wanted to figure out a payment, currently 8.25, that'd be $8.52 per 1,000 on the loan amount. So that would be the principal and interest payment monthly on a loan. So you can figure that $8.52 currently for the rate and payment. Yeah.
Great. Yeah, it's awesome. Both different parts of the different regions, but both addressing a real need. And with that new, statewide bylaw, folks are going to have that option of what works best for their family and their property, whether it's attached or detached or the renovation to make it work, which is great. And thanks for touching on that, Jim, in terms of the payment, because we're often doing an all-inclusive construction price. And sometimes there's a bit of sticker shock there. And it's great to translate to that. Hey, what would my monthly payment be as compared to going out in the market for, say a rental unit, or often when we're building for aging in place, that, facility, whether it's a nursing facility or a skilled facility, versus maybe, hey, I can have someone in my backyard and set up a care network.
Right.
Something we've experienced before as folks are using these products is the appraisal. So how does that work on your guys' end? You're talking about the debt to income ratio and how high you'll lend on that completed value. How does that appraisal work, and what are you seeing?
So it sounds like Jim and I are fairly closely aligned in how we're completing our appraisals for these, which is what is called the as completed value. So we're assuming, and we're having our appraisals assume, that this ADU is already in place and giving a valuation based on that versus what is my house worth today as it stands. And we found this gives a lot of flexibility for folks because these accessory dwelling units do add value to homes, especially when they're freestanding. We've seen a little stickiness when people are converting existing space in their house, especially if they're reducing their existing bedroom and bath count on what's going to remain as the primary dwelling versus what's going to be the accessory dwelling unit.
That's a really great point.
Yeah, great. I mean, in the way the values have been going in Massachusetts, it's we're going to take the first mortgage. I mean, the appraisers don't like you looking at Zillow, but most of the times you can find your house on Zillow and what the current value is, and then the all-in price for the ADU, and figure that'll be tough deciding finding out where that number is going to be on the completed value. But of course, because of the rise in all values of homes, it seems like it most times this is going to work. It will work out. Yeah.
Especially if you bought your house a number of years ago and have had the opportunity to experience that value appreciation that's happened within the last five or 6 years in a really rapid pace. We do have people who are coming to us who have bought their houses a year and a half ago. And sometimes that's a little bit more tight when it comes to what the value is going to be, especially if they didn't put a large down payment when they purchased the home. But if someone's been in a home for 5-6 years, they're going to have a lot of opportunity there with the existing equity in their home.
Definitely.
And that's what we're seeing here too, is folks who are saying, hey, I bought my house sort of in the past couple of years, and maybe they didn't put down that full 20% down payment, that maybe this isn't a great option, but there are sort of the other slice of the pie there of folks who've seen, unfortunately, again, with that construction cost increase, there's also been that appreciation, and it's a great way. Now I have, equity to tap into to make a big decision.
I have a question that came up. Do banks lend equally to complete ADUs versus a DIY?
So for ourselves, if we're financing an accessory dwelling unit as part of our specialty product, which does offer a discounted rate, we would require a building permit and construction plans and specs from your builder. We would not finance a DIY project using our ADU parameters, just because we do want to make sure we're using licensed and reputable builders here. But on the flip side, if you do have a good amount of equity in your house, take out a home equity line of credit, which can be used for whatever purpose you want. you could certainly finance your accessory dwelling unit that way on a DIY model, although I'm speaking solely to what we offer here at the bank. Others may have that flexibility for a DIY approach.
With us, it would be a case by case basis, but we would have to see that you've done general contracting in the past and are able to handle a project like this. So it is pretty rare that we'd allow a non-contractor to do the work, do it yourself, right?
And in our experience as a builder, and you see on our website, we've offered and done DIY products. It's that exact same nuance. There is likely that ADU lending product, or a construction loan. We're the CSL, we're the construction supervisor. We are on that project, versus folks who may tap into that home equity line can use that money as they like. Or we have had folks who are doing the DI route be their own CSL, and great. In that case, they can access those funds. Yeah, so that's a good one. If you're thinking about doing a DIY, definitely, as you're looking at your finance options, make sure you make that known to your lender, so you get the approval.
And what I can add legally is, because I've handled litigation over self-built houses, number one, you need to be aware of safety. Are you going to do it totally by yourself? Are you going to have people working with you? If so, what happens if that person gets hurt? Are they an independent contractor, an employee? The other thing is, are you intimately familiar with the many, many details in the Massachusetts State Building Code? And are you intimately familiar with the things that any knowledgeable builder would do with a house that are not in the building code? I mean, it is still a medieval guild type trade if you're talking about a stick-built on-site house. And also be aware that, and I have seen this happen, if you build it and you start making mistakes, that can be very, very expensive. You may end up wishing you had hired a contractor. The only way I have seen that work is where you find an individual licensed construction supervisor who might be willing to work with the homeowner as his or her helper. That is one way to do it. Then you've got the best of both worlds. A lot of sweat equity, but somebody who's licensed and knows what's going on. Thank you.
And our sort of filter process for folks who are thinking about that DIY route is very rigorous, because exactly to everyone's point here, it's not for the faint of heart. It does require expertise and skill and experience.
PSA, if you're going to go that route and you want to finance it through a home equity line of credit, have your financing in place before you break ground, because many lenders do not like to come in and finance a house under construction, especially if you are doing a DIY type project, because that speaks to the, requirements that both Jim and I have, and most lenders would have, for who's completing the work on a property that they're collateralizing.
I have a couple more.
Go ahead, April.
Sorry, I have a couple more product questions before we get into this things about ownership and land sharing. First off, how do your, this is very relevant. How do your banking products modular?
Charlotte, you want to?
So for modular homes, as in something like what Backyard ADUs is doing, or are we talking mobile? Sorry, you broke up a little bit.
I'm assuming, and we can do both. So how do your banking products handle modular homes? And then the other question, is financing different for a park model RV certified on wheels? So
our financing wouldn't touch the RV on wheels. Banks have concerns with collateral that's on wheels because it can drive away and it's really hard to find. With the modular side of things, which is somewhat similar to what you guys are doing, we are comfortable financing modular accessory dwelling units.
Same with us. I mean, it would be that check would not be. I'm pretty sure that would need when the modular arrives. The check would be, the first payment would be made. And the borrower is allowed to use their own money and recoup that money later in the construction loan, as long as we can show proof that it was used and what was done with it, and in that way they can get the project started. And the upfront costs, sometimes if the borrower covers those, we can reimburse those as part of the loan.
And here at Backyard ADUs, we have a very clear breakout of our payment schedule and work with banks often to make sure that our payment schedule aligns with the modular disbursement schedule.
Tim, will you first quickly explain the difference between modular and what they're talking about with an RV?
Absolutely. So what we're at the end of the day, we're pulling a building permit to complete a structure. We're building this module offsite, delivering it and setting it on the foundation, versus what you mentioned earlier, like a park model or an RV, something that, you know, has wheels and is on wheels. So there's sort of different codes, different zoning for those as well. But what we're building is, you know, residential construction under building code. And that's what these products are all for. Versus, like Charlotte said, hey, if I'm living in an RV, there are ways to finance an RV, but it is not through, you know, the ADU lending program. And there's, you know, different requirements there. So what we're doing is whether it's stick built, not by Backyard ADUs, or by Backyard ADUs building modularly, we're building a dwelling as it relates to zoning. So last thing I sort of wanted to touch on as it relates to these products, and you mentioned it earlier, Charlotte, and it's very relevant in a lot of parts of our state, is how do you look at rental income? At Backyard ADUs, we've mostly built these for families, for multi-generational living, but there have been a couple that either were explicitly built as a rental, or it was built for a family member, but they actually decided, hey, I'm going to rent this out for a couple years, you know, pay some of my bills, have the ADU pay for itself, and then transition my family in when they're ready. So how do you guys look at that rental income piece when you're thinking about these products?
You know, we were scratching our heads when we said, hey, let's use rental income as a projection for for these products, because there weren't a lot of what are called comparable properties in the market that our appraisers would be able to look at and say, okay, here's what rent typically looks like for an accessory dwelling unit. You know, they're still infiltrating the marketplace. And what we ended up doing was, if someone doesn't have a signed lease in place with a independent renter, we went ahead and we're using HUD's area median income fair rental figures just to calculate a baseline of what someone might be able to obtain for a renter and a rental cost.
Yeah, I think this is a little bit of a stumbling block for us right now. I was talking with someone else who's doing one, and the borrower, we can use 75% of the rental income towards the household income. The only thing is we're going to require a signed lease and a deposit, first month deposit, which is going to be tough to get, you know, somewhere who's going to put up a check and, you know, look down the road in 6 months when it's completed that they'll be renting that unit. So I think we have to iron that out a little bit right now. And but Fannie Mae guidelines is that you can use 75% of the rental income. They allow that for you know, someone moving out or vacancies. Basically, that's why the reduction. But you know, it can be done and used to help you qualify with the household income.
One point with respect to, and I'm bleeding into ownership and partnership, and thank you, Jim, because it occurs to me, for example, that say the kids own the house, the grandparents want to build an ADU. If they don't want to start changing ownership, possibly creating a condominium, and Jim, you noted if there's an individual mortgage before we started, that will have to be paid off. That's one possibility. They could do a long-term lease. And if you're talking about family members, that may be a situation where a prospective tenant is a lot more willing to sign a lease and put money down before it's built. In other words, it's family members working together to get something facilitated, even though legally they're structuring it as a rental.
Great. Thank you, Michael. That's a perfect transition because we often get a lot of questions as it relates to, hey, this unit's being built. Who's it for? Is it for friends? Is it for family? Really, how is this going to work? And so the both lenses here, how does the bank look at that? If a family member is moving into the backyard, who are you lending to in the case of mom's building in their son's backyard or vice versa? And then, or, hey, is a friend living in my yard? Or am I doing it as a rental? How do you look at it from the bank lens? And then Michael will transition to sort of ownership and how that might look.
That's definitely a layered question. We look at it kind of on a case-by-case basis. Not unfrequently, we're seeing parents come in and help with the financing to help someone qualify for the cost to build, in which case we do require one of those people to be on title. So if you're not currently on title, we need our non-occupant co-borrowers to, well, if all three parties, let's say daughter, two parents, are financing together, we need one person on the title who is also on the loan.
Mm-hmm.
Sometimes we see the parents want to finance in their daughter's yard. And that's where it starts to really get complicated because daughter already has equity in the home, but maybe doesn't qualify on their own. And the parents, minimal debt, no property owned. I can finance this on my own, but I don't own the property. So we do require, in that instance, someone to go on to the title, which does get a little bit complicated in terms of the ownership and the equity agreement. So we always recommend someone speak to an attorney to hash out potentially a contract to address all of those concerns.
And that's why we're all here tonight, because it involves, multiple cooks in the kitchen to figure out how to make it work. Jim, have you come across this at all with your ADU products?
Yeah, not. I mean, it has been brought up, yes, and like Charlotte said, it would be a type of situation where it would be a non-owner occupant, so they could put the parents maybe on the second lien, and that way they've got their ownership separate, but the daughter would still stay on the main house deed. I think we can do it that way. Michael, you see a problem with that?
I don't. I think that one possibility, for example, even if you're converting it to a condominium so that the home, the dwelling and the ADU are in separate ownership, Jim, I would think that if one takes the position rather than asking the lender to subordinate, you're basically saying, okay, maybe now we have kids owning the house, grandparents owning the condo unit that's the ADU. What if everybody says we'll all sign on both mortgages, both the first mortgage, we'll add ourselves to the first mortgage, and then all four of us will sign on the second mortgage for the ADU. At least then the lender is in the same position with respect to the entire condominium, both units. I'm brainstorming because we're in somewhat uncharted territory, but that might be one way to say to the lender, you now have the same protection. Both the first mortgage holder has the same protection because you've got additional collateral, and the second lender in effect has the same protection because you've got a mortgage that covers the entire condominium. If you're foreclosing, you're not just foreclosing on the ADU or the principal dwelling, you're foreclosing on both.
Yep, that makes sense.
One thing, if we're going into that, do not in Massachusetts let a town make you believe that they can bar condominiums. Okay. I can't speak to other states, but I've been asked this question. I've researched it. Zoning is land use. If property is being used for residential use, form of ownership is not within the realm of Massachusetts zoning. And the reason you see an edge in my voice, it's because what we're beginning to see, I think statewide, are municipalities cooking up all kinds of legal schemes to try to block ADUs. In other words, they don't necessarily want ADUs to be a matter of right. And so they're thinking of ways to hem them in. In Amherst, a university town, for example, they're talking about, well, only one property, either the ADU or the principal house can be a student property because there's a lot of student rentals. And again, you're talking about occupancy, people, not whether it's single family residential use. And forgive me, I'm a litigator. I'm waiting for that case in a Massachusetts town because I think the Massachusetts Land Court, I'm hoping, would basically say, no, state law prevails over local zoning. And the legislature was very clear that they want ADUs as a way of addressing the affordable housing shortage. Thank you.
And Charlotte and I see this a lot on the Cape, where towns' previous rules, again, the Cape's been ahead of the curve. These rules have been in place for, sometimes 5 years or more, specifically say, hey, they can't be held in common ownership, but this new level playing field, the statewide ADUs by right, puts us in this, sort of uncharted waters here. And that's what you're speaking to, Michael, is there might be some challenges to those older rules if they were to try to stay in effect.
And another way the town will, I hate to use the word con you because they may not know. They may say, oh, well, if you want to challenge our zoning, you've got to go through all the time and money to apply for a building permit, which we will deny. Then you have to appeal that to the Zoning Board of Appeals, which may be appointed by the town manager or the select board. And so we pretty much know they're going to back up the denial, and only then can you go to court. There is a little known statute, Mass General Laws, Chapter 240, Section 14A. You can go directly to the land court and say, here's the zoning, here's what we want to do. Please declare this zoning illegal because it regulates a form of ownership, not land use. And all you need are rough preliminary plans of what you want to do. And you can in effect bypass both the building inspector and the zoning board and go straight to court. Thank you.
And I'm sure I've heard some rumors we're going to see that shortly here after February 2nd when the law comes into effect. We've in our history once built an ADU for a non-family member on a lot together, which was a unique circumstance where a college friend moved into her friend's backyard as she was retiring. They've been friends for 40 odd years. And it was a great story. It's actually the first one we built on the Cape in Harwich. But Michael, if someone, and Charlotte talked about it earlier from the lending side, hey, you should go make some sort of legal agreement if you're basically investing money in a non-family member's property. What does that look like, or how would you work with folks to figure out some sort of contract of?
If it's a non-family member, you may want to consider a long-term lease. For example, you can make a lease if the mortgage term is 20 or even 30 years. You can make a lease for 20 or 30 years, and that might give the non-family member some protection. Another possibility is to turn it into a 2-unit condominium. The key there of recognizing that may force you to restart the financing at albeit a higher interest rate than you may have, but the key for a 2-unit condominium is what's called an arbitration provision. If the two owners can't agree and deadlock, they have to go to another decision maker who will, in effect, break the tie. And arbitration is called alternative dispute resolution. It's cheaper and faster than a court. But there are imaginative things you can do, not only with a lease for years. Another possibility is what's called a life estate, where somebody has a right to possession for their life. Although you can also say that terminates if they cease to live there for a period of 6 months. Now, if you're not turning it into a condominium, you're going to want to specify that life estate is only in the ADU. And I'm brainstorming here because we're in somewhat uncharted territory, but I don't know of any reason why you can't do, certainly a lease for a term of years on either the ADU or the principal dwelling, not the whole property. I don't see any reason why you can't even do a life estate. For example, if parents or grandparents want to move in, and it does happen. The kids throw the parents out and take whatever there is for themselves. Families don't always get along. You can have a life estate and specify that that is only in the ADU. That hasn't been tested by a court, but it's another alternative possibly to a condominium.
Interesting. So that would be in that second scenario, if they're doing a long-term lease, that might satisfy on the ADU lending side. Hey, there's this lease in place for which they go and look at, that rental income for the ADU product. If
And-
it were to go to this condominium route where we say, hey, we now, instead of this accessory dwelling, it's 2 condos on the same lot. How would you guys look at it from the lending perspective?
Well, to use Michael's phrase, I'd say it's a bit of uncharted territory for us, at least, just because Cape zoning can be very anti-condo and anti-single family, which we've seen for a number of years. It's something we'd have to look at on a case-by-case basis, but if it's all done on the up and up, it's something I think, we could potentially gain comfort level with, but it would have to be looked at a little bit more deeply.
There's a question here too that relates to this. If the ADU if the ADU will be funded and for a family member selling a home, can a contingency clause be included in the contract with backyard ADUs, and or can a payment plan be adjusted to allow for a current home to sell concurrent to the build?
So that's more directed at us in terms of our contract. Yeah. Trying to think of examples. We've had it, like we've been saying a lot tonight, unique circumstances of, where's your town? Where are we building? How big's the project? All those things. We're typically, the way we're building, going to contract with that one individual, and we'll sort of have, do all this work up into place and then lock in, and we're going to build. So a contingency at a certain point of not going forward. Once the train has sort of started moving, we're building it in the factory, we're pulling out permits, all that. It is a little bit tricky. But we work with homeowners and families, throughout that whole process to figure out what would work. So I'd say probably reach out to me with more specifics of your situation, and we could look at how we might be able to help and be flexible.
And I'll put everyone's email addresses in the chat so that everyone will have that throughout to reach out to everyone later.
One place where the legal and the financing intersect, and it certainly fits with my experience in years of real estate conveyancing, is don't try this with a mega bank or somebody you see online. Deal with a bank that is small enough and local enough. You can go to the head office, meet with an officer of the bank, and talk with them. They may be more willing to perhaps consider something where a mega bank, if it doesn't fit in their established categories, they're not going to waste their time with you. And the other side of the coin is, if you have a problem, I can tell you from some of the gray hairs I've earned working hard, you're in big trouble if you've borrowed from an online lender or a mega bank, because you're dealing with somebody who has a script and simply cannot help you or make any accommodation. So I think everything that we've talked about here tonight suggests that you need to focus, look for the local banks where, like, the home office may not be in Massachusetts, but at least you got Jim. Okay, you got a live person who you can talk to. You're dealing with a small enough institution. Thank you.
And I just want to add to that our product is a portfolio product. It's not going to be sold on the secondary market, so we do have some leeway there that we can make a decision, and it doesn't maybe fit the square box, but we can get around that and maybe work with the people.
Yeah, we're in the same boat with that. It's just
Right.
A world of difference dealing with a local bank who understands your community versus a mega bank who understands their bottom line and prioritizes that over everything else.
Yeah, and in our world, we're doing that fixed price, so folks are locked in and trying to avoid the pitfalls of construction of, oh shoot, we didn't plan on this, and now there's a big hole and your yard's blown up, and we're under construction and we forgot X, Y, and Z. So in that realm, like, how do you guys deal with, interest rates? All that stuff's changing. Like, when do people, do all this work with you and plan, and when do they sort of lock in and know what their payment and what their rate is going to be? How does that work?
So for us, it depends on the loan product you choose. If you choose our equity line of credit option, we'll discuss the payments with you up front always. Our equity lines of credit float with prime, so those loans are not locked in the way a typical first mortgage loan is locked in. Because these are held within our portfolio, we say a 55-day rate lock, but there's flexibility with that. So the timelines for us, it's looking at the timelines of just providing the documentation we need to get you closed. We try to keep it pretty streamlined so that people can typically close within 50 days of their application, assuming they've got their ducks in a row and they know what they're actually going to be building and have that contract in place and their builders submitted for the permit by the time.
Do you require the permit to be issued, or is it like a receipt of submittal?
We require the permit to be issued by the time we close. Reason being is that with our home equity line of credit or our mortgage program, the mortgage program or a home equity loan. So quick nuance between a home equity loan is typically second lien. We disperse all the money at once, where a home equity line of credit, you draw on it as you need the money. So with any of those programs, we're dispersing the money at time of closing. And with the home equity line of credit, you're getting a book of checks to write those checks for the costs as they come up, which is a little bit different from a construction loan where funds are released as the project progresses. So for us, because the customers have full access to the funds, once their loan is closed, we do require a permit in hand.
Great, thanks, Charlotte. Jim, I'll let you answer that, and then I'd love to sort of interface with how it works on our end as we're looking at construction and what your carrying costs might be with those different versions. So go ahead, Jim.
Right. I mean, we're a little rigid on the construction loans as far as applying. We pre-qualify you for the upfront and just make sure that it's going to work with the household income and debt. But we want to see the plans and specs, the contract with the contractor, and the budget before we can apply and lock in a rate. I mean, it's a 60-day rate lock, like I said, per portfolio product. But that's the big thing, is having that agreement upfront and then being able to apply and lock in the rate.
Yeah, it almost the way we've structured ourselves at Backyard ADUs is a 3-step process where folks are doing a feasibility up front, getting some ballpark pricing. That's often the stage where you mentioned pre-qualification, Jim. I send people, say, hey, this is what we believe the construction costs will be on your specific property. Go engage the lender if you're thinking about financing, because you have a piece of paper, you have a report. It's not a build contract. We don't have all those specs yet, but you haven't needed to start spending all the money to get those specs, the survey, architect, engineered plans, etc. And then as we're working in phase 2, we're actually nailing down the exact price. We're generating those docs that will go to you guys for submittal. And so the folks can work through and say, hey, I know exactly what it costs. Charlotte, what's my exact payment going to be? How do I qualify? What's my rate going to be, Jim? And, how long do I have to lock it in? And then after that, the reason I asked about submitting for the permit or getting the permit is every town's still a little bit different on how quick that process happens. So on our end, when we know, hey, we're the last ticket here, the customer's all set, they know what we're building, what it costs, the financing, all the papers are ready, but we're submitted to the town waiting for that document to be issued. And then we can go ahead and get our construction underway. What is that pre-approval process like, either for you, Charlotte, or for Jim? Like, how does that work for folks?
Just a little warning that we have 10 minutes left and I have 12 questions. So but go ahead.
It's pretty similar to any mortgage program. For us, we're looking at your credit, we're looking at your income, we're looking at your assets, and we're looking at your collateral to verify your ability to repay this loan within our debt to income limit ratios. So be prepared to submit a full loan application, have your credit pulled, provide pay stubs, potentially W-2s, tax returns, business tax returns if you're self-employed, homeowners insurance and tax bills for any properties you own currently, as well as any asset statements that you might have. And Jim, chime in if I'm missing anything here.
I know it. It's pretty much
Go through the list.
everything. Yeah, we want to know that you're stable, and we do a soft credit check and then a hard tri-merge when the application is submitted. And that pretty much is the same score you'd have on the soft credit. Yep. Everything else is pretty much the same.
And the reason I wanted to go there is because we get asked a lot, like, what is step number one? Where do I start? And I really don't think there's a wrong answer, whether you go and figure out, hey, what can I borrow? What am I eligible for? So you determine, hey, where's my budget going to be? Or you come to Backyard ADUs to try to figure out, hey, what is this going to cost? And then back that. And so we can find that balance of, hey, actually being able to execute it. Is this a viable option? And then do I have the ability to make that monthly payment? I want to touch on, we talked about it a little bit earlier, as family members get involved or friends get involved, and maybe someone else is bringing some cash to the table. How do you guys look at that on the banking end? And then Michael, again, sort of going back to ownership and partnership, how should folks be talking about that from a legal perspective? So maybe, Jim, do you want to kick us off there? And if there's that second party at the table, how do you look at that?
Yeah, I mean, we'll do the same pre-qualifying, and if they're going to be on the deed, and we're going to go through that, and it's pretty much the same guidelines we follow if someone was going on as a non-occupant co-borrower. They're going to be maybe a non-occupant co-borrower or maybe an occupant, but we're going to look at the total package, the total debt, the total income, and determine from there, what they qualify for. And I think that's our main thing. The ownership, I think Michael can speak more towards that, and being on the deed, on just the second, the ADU, it's a little bit different. So, we'd have to be careful on that. But, that's pretty much the way we'd look at it, I think, as a non-occupant co-borrower.
Is it similar in your case, Charlotte?
Yeah, I mean, assuming you're saying, hey, I'm someone who's coming in and bringing money into the transaction through the financing side of things. If the question is, if I'm Charlotte and someone in my family thinks I'm fabulous and wants to give me $100,000 to help me build an ADU so they could maybe eventually move into it. It depends on how that's incorporated in the structure of the financing, right? So if we as a lender see a large deposit in your bank statements, we're going to ask about that and require potentially a gift letter to be signed by the donor to make sure there's no expectation of repayment for those funds. That being said, if they come in afterwards and want to give you that money, great for you, great for me. If that was a situation I lived in, that wouldn't necessarily affect the financing. It just depends case by case how that money's being infused into the build. So we, just like Jim, like to have really in-depth conversations with people up front to understand any nuance that might be coming down the line so we can help guide them and appropriately incorporate that into the financing transaction.
And Michael, just real quick, because I know we're approaching 6 o'clock and April's got a bunch of questions, and I want to end with everyone's, as we're brainstorming, like future improvements. But if someone, is bringing money to the table, building in the backyard, again, sort of contractually, how would you advise folks to potentially think about that?
Well, with respect to time, I don't know if we're allowed to go over. If we are, I'm happy to stay. April is going to give out contact information. So if people have questions for me, they're welcome to contact me. What I think I've learned here, and I've been thinking about this, what to do, and the lenders may not like this, but it's what I've seen be the difference. Every mortgage has the right to foreclose if there's an unapproved transfer of the property. Where there is a transfer after the first mortgage, I've never seen a lender do anything as long as the payments are being made in full and on time. But I guess what I think I'm hearing is if there's something like that going on, you're not going to be inclined to grant a second loan. In other words, we've got to figure that out, how to secure the property. And I don't see any other way other than condoizing it and having the units owned separately, the principal dwelling owned by the kids, the ADU owned by the parents, or the kids conveying a life estate in the ADU portion of the property, even if you're not condoizing it. And that's where you begin to get into uncharted legal territory. And I guess I want to thank you all because you forced me to think about legal areas for which there is not necessarily a clear precedent. What I like, however, is if we can come up with arrangements, legal arrangements that a small local lender can live with, especially if they're not going to sell the loan on the secondary market, so they have leeway. And that is the key right there. Then I think we can work out the legal details. And if you have a special situation, if we aren't able to go past 6, if somebody has a legal situation, they're welcome to contact me. And I assume the same is true about the lenders, right? You're happy to hear from folks individually if their questions didn't get answered before we have to stop tonight.
Definitely. I think we'll have the couple extra minutes. We always like to make sure everyone's questions are answered.
Oh, good.
So Jim, what do you think, as these products have changed, and we talked tonight about some areas that they'll continue to change. What do you think on your horizon, like continued improvements to help folks with ADU lending and finding that housing option?
Yeah, I mean, I think it's great. We've always had a great construction loan program. I'm sorry. And I think this will continue. And I think it will evolve to be a better product as we, work through our kinks. But, I think it's a great opportunity to have an ADU and for families. It was funny. I was talking to a building inspector in Mass, and she told me that she's getting a lot of inquiries, but mostly from investment purposes to rent out the property in the backyard, which I felt that it's more oriented towards family and downsizing for the parents. Yeah.
The one thing I want to throw out, if you're going to rent an ADU, make sure you have sound legal advice. Massachusetts has one of the strongest legal frameworks for protecting residential tenants. It is very easy to make a seemingly very minor, technical, non-substantive mistake, and all of a sudden, for example, you've got the Board of Health breathing down your neck, the tenant is withholding rent, you still have to make the mortgage payments, and you are in serious potential trouble. A minor technical slip, you have to not only return the damage deposit before the tenant leaves, you may have to return triple the damage deposit. Renting is very, very makes good sense for income, but you have to be sure you know exactly what you're doing and you follow the Massachusetts landlord law to the letter. Thank you.
We have a lot of questions around a whole area we haven't touched on. That's super important. As far as all the grant programs, what other opportunities are available aside from, or what other options there are besides working with banks. I did put in the chat for everyone at the very top. Everyone should be able to see it. It's our financing page. So that does have all of the resources. Tim can touch on a couple of them quickly, but all of the forms, all the websites for other financing options are on there. In addition, if you would send Tim or myself an email, we've got some comments that have come through the Q&A of some upcoming programs. So if you don't see the program you're talking about on that list, it'd be helpful for us if you could send that along to Tim so it could get to the right spot and we could put it as a resource for folks. I've also put everyone's email addresses on there. So I'm just kind of directing people there to copy and paste things while we answer these last few questions, along with our YouTube channel, which we will get into a few questions, but a lot of information is on there. And so one of the most common things coming up is around people with disabilities and what options there are, whether we build for adult children with disabilities, if there are programs available. Tim, could you touch on that a little bit?
Yeah, absolutely. I'll speak to that specifically, and then more broadly, there are a lot of programs out there, and our experience has been folks are building an ADU. It's typically not being paid for in just one form. You know, it may be some cash, it may be some financing, and it may be another program that's out there. I was actually just working today on a home modification loan program application. That's one if you are in Massachusetts. It's a program that's out there for folks who are elderly or have a disability to tap into some state funds up to $50,000 to build their accessory dwelling unit. We built several times with this before. Mostly every time. Folks are also going and financing a piece. Often at that point, they're doing that home equity line of credit. They're not going for the full ADU program where they're taking out the whole thing. They said, hey, I have this in savings. I'm getting the home modification loan program funds, and now I have this portion that I'm going to look to lend. So everyone's scenario is unique. Home modification loan program, or the HMLP for short, is a great one to check out that we interface with. And then I'm a little bit out of date. Certain towns had some, like Salem, Mass had an ADU grant a while back. I think that's dried up. The Lower Cape ADU Resource Center had some grant funds. That too has gone away, along with the Housing Assistance Corporation on Cape Cod. And so there's others out there. There's ones out there I don't know about. So I'm excited to learn about those. And our goal here at the end of the day is to help people figure out a good option. And so we're happy to interface with them, and then as well figure out if there's any financing gaps, how to make that work.
Great.
Are there any that you guys
Sorry
know
for
about?
everyone with the
Jim or
chat.
Charlotte,
No.
other programs or assistance?
No,
Thanks.
I
Yeah.
haven't heard.
Again, in uncharted waters, and especially here,
Right.
the governor has sort of poured gas on the fire here to help us address the housing crisis. So there's gonna be, I'm sure, new ones coming out. And
Yeah, do you know of any tax credits available in regards to building an ADU?
I haven't read a lot about them. Michael, have you read any tax credits as part of the governor's new?
No, and I have to be careful. Tax was my worst course in law school. If you know a CPA, over the years I've learned to trust certified public accountants much more than the pop-up tax services or things like TurboTax. They don't work cheap, but in my experience, accounting firms who handle, people with more money or small businesses, there's usually one or two in most communities or nearby. They're the ones who might be most likely to know the tax laws. In my experience, one has to be careful because tax law is a legal specialty in itself. I go to a CPA when I have a tax question.
And that's why I hesitate to spew any sort of advice, because I am not a CPA.
Can only the property owner be the borrower? For example, a grandparent owns the property outright and the grandchild wants to build an ADU in their backyard.
Yeah, Charlotte, you spoke to this earlier about, being on the deed. Do you want to answer?
Yeah, so if grandma's the one who is qualifying for the financing, she's the one who needs to be on, the title for the property. So in the instance where she owns her home outright and, grandma's saying, I want to build an ADU for you, granddaughter, grandmother can go ahead and do that without any involvement from the granddaughter. Now, on the flip side, if grandma owns the home outright and granddaughter wants to finance the ADU, that's where we get into, now we need granddaughter on title to grandmother's home.
And what I have to add there, and I don't know how many times I've seen it. It's a sad reality of life. Money is thicker than blood. Okay. I mean, there's all kinds of ways families can have horrific falling outs. And that kind of an arrangement has to be accompanied by some kind of legal provision so that both parties are protected, and possibly even so they have some kind of buyout or dissolution provision. But over and over again, it's just a sad tale where one generation ends up in court seeking to evict the other generation. And take it from my gray hair, the best lawsuit is one you can avoid. And if you get into litigation, the only sure winners are the lawyers for the combatants. You don't want to go there. It's a little like the combat veteran saying you don't want to fight a war. Thank you.
I think another scenario that was brought up too, in our main discussion with this too, is when, say the granddaughter's living in the backyard and grandma passes away and granddaughter feels entitled to that land and property when there are other family members who feel they are, is another one of those scenarios where family dynamics can come into play.
Thank you so much, Avril. The last thing any person, and being in my 70s, believe me, I can relate to it, and I've seen it happen. You want very thorough estate planning, because what you're talking about, Avril, again, turns into a war like the Charles Dickens novel Bleak House, where by the time the lawyers are done and decades have passed, there's nothing left. Or what I've also seen happen is family members ready basically to kill each other over money. And it turns out that grandma, grandpa, or mom or dad did a careful estate plan. And I'll never forget the time I saw 3 daughters in a lawyer's office. And by the time the lawyer was done explaining the very thorough, careful estate planning that their late father had done, they went to the lawyer straight from the funeral. They turned to each other and said, well, he may be dead, but he's still the papa. We've got nothing left to fight about. And they all walked out the door. They weren't happy, but there was no battle. Thank you so much, April.
Yeah, I think it's a good piece just about, we're building a house. It's pretty permanent. It's on that foundation. It's not the RV that can drive away. So they are big projects, even though they can be small homes. So as folks are looking, there's all these different things to figure out. And I think our ethos for tonight was, consult professionals to help you with these hurdles. And that's our goal. And that's everyone on this call's goal tonight, is to help folks navigate the potential pitfalls out there, and to help with housing. Are there any final questions, April?
There's still a lot of questions, but I will direct everyone. One question though that I think could be easier to answer, or that a lot of people may have, I should say, is there any way to avoid impacting my principal on my existing mortgage, which is at a very good interest rate, while also tapping into the equity, noting that we're still concerned about the rate of the supplemental loan?
So we hear this day in and day out. People don't want to touch those low first rate mortgages. So both products that Jim and I offered, we spoke to second lien position. So with his construction loan that would sit behind your first mortgage, Jim corrects me if I'm speaking out of place, as well as our home equity line of credit or home equity loan option, which could sit behind your existing first mortgage. And that first mortgage does not have to be with our bank. It could be, and I hope it's not with Quicken, but we would be okay with that as much as we.
And as I think about it, and again, it's the way life really works as opposed to the paper mortgage. As long as that first mortgage lender is being paid in full and on time, and as long as, whether there's a life estate or a condominium, you can say with a straight face, truthfully, to the second mortgage lender, you will be secured by the entire property. Both the remainder people and the life tenants will sign the second mortgage, or the owners of both condominium units will sign the second mortgage. As I try to think this through, I think that puts the second lender in the same position they would be in as if there had been no change in the title. And like I said, I have never seen a first mortgage lender foreclose because there was a chain of title after that mortgage for two reasons. One, if they foreclose, that conveyance gets wiped out because it's junior. Two, as long as they're getting paid in full and on time, even where it's sold on the secondary market or not, I've never seen a lender, they don't want the property, they want to get paid. So as long as they're getting paid, why would they squawk? Thank you.
What other questions we have, Averill? Thanks for everyone for staying a little bit longer, just so everyone leaves with their questions answered. I know everyone's info tonight is in the chat as well, so any specific follow-ups, folks, feel free to reach out.
I think we've touched on a lot to some degree, at least, that aren't too nuanced. If an ADU, and this is on Cape Cod, so maybe to Charlotte, if an ADU is to be built on a lot neighboring the primary residence, which is on a separate loan, will equity in the property to be built on be considered along with equity in the primary residence?
It's not an ADU then. Legally, I don't think that's not an ADU. That's a principal structure on the second lot. I'd appreciate other people's thoughts. I've never heard that one.
That be true for finance too?
Well, yeah, and I think what the nuance is here is that these are two separate lots legally. So in that instance, we typically would not consider the equity in an adjacent lot as part of the transaction unless we were to cross collateralize both of those properties with this accessory dwelling unit transaction. It's not something we see too much. It would be probably on a case by case.
And we see sometimes that too in the field with our feasibility study is, hey, we've done all the zoning research. Turns out your house is on a double lot. It can technically be two. And now you can build the exact same physical 800 square foot 2-bedroom house. And you could either do it on a separate lot, cut those lots in half, or have it be the subordinate structure. But once that second pathway is open, hey, this is a principal structure on its own lot. It is now a single family house, not the accessory dwelling. And then thus you'd be likely eligible for more products, right? You'd be able to a traditional mortgage or a construction loan.
And beware of the trap for the unwary. For example, and I've seen this happen, 15,000 square foot lots, East Hampton, Mass, right next to Northampton. 2 lots, 15,000 square foot each. Somebody puts a house on one, retires, thinks they're going to sell the other lot. They discover zoning is now 30,000 square feet. There's still separate deeds. You can convey it, but at some point you're going to discover to your detriment that those lots were merged for zoning purposes. So if you have multiple lots and then you get into common ownership or control, that has to be looked at to see whether they indeed have been merged or not merged. And that is very much a case-by-case situation. If you find a lawyer who can give you an answer to that kind of question off the top of their head without thorough examination of the facts, find another lawyer.
And we do the same thing here when we're vetting zoning, and especially now when the Affordable Homes Act comes into play, there's going to be sort of a new playing field, new nuances to those rules specifically for ADUs. So definitely reach out so we can look at your specific lot in that zoning district in your town, because there's going to be these various layers that we need to look at. We're not the lawyers. If there's things do come up, and you can bring a lawyer in, but it's important to do your due diligence early on.
The buzzword is merger of substandard lots. That's the legal terminology you have to look out for. Thank you.
Are there any one or two more final questions?
We have I have a couple quick ones. Jim, maybe you could speak to this. A home equity line of credit, does this seem to be more the way to go versus a construction loan or a second mortgage?
I think if you have plenty of equity in the property, you can get the home equity line you don't even have to tell us what it's for. In some cases, it might be better that you're not telling us that you're going to build a ADU. So it is a better way to go. If the equity is there, it probably is that route, because you're using the equity in the first home to build.
And I'll give a caveat on, that second lien position mortgage on the HELOC, is that you just want to be thoughtful of the payments. Typically, HELOC, home equity line of credit. Typically those payments are going to be interest only for the first 10 years. And then those payments are going to recalculate into a 20-year repayment period. So I would definitely speak with your mortgage representative about what payments look like during the interest only, during the repayment period. And if you want to be in a situation where you don't have an inflated payment in 10 years, or you're not just treading water making interest payments for 10 years, to look at what your principal and interest payments would be to repay that loan a little bit more aggressively, because that can be a bit of a sticker shock for folks.
That is a good point, Charlotte.
From
It
our
certainly helps with upfront affordability.
I know
Yeah.
we can go down the rabbit hole of condos. So does anyone have any resources where one can learn more about putting an ADU into a condo for loan purposes?
I'm not the lawyer, but the landscape is going to shift. When we're looking, historically, when you're looking on the West Coast, ADUs have been around for, decades. The rules have changed over those decades. We are sort of on, this new frontier here on the East Coast of ADUs and zoning bylaws. Hey, the Cape's been ahead for 5 years or more. But we're going to be in this new zoning era. So we're going to see things change, would be my lens.
And with,
Yes, I think it's people hearing about this option kind of for the first time is the way it sounds by the number of questions of where or how to navigate that. And I hate to point people towards Google. But it's
well,
like-
let me, Massachusetts condo statute dates from the 1960s. There's a vast body of case law, mass continuing legal ed, mass practice, where I've written I'm the author of some of the volumes. There's a lot on condominium conversion and creation of condominiums. I have seen 2-unit condominiums, like a duplex split into 2 condo units from the late 1980s even. So that part of the law is very well established. Where we're on new ground is doing it with an accessory dwelling unit and trying to get the darn thing financed. So the condo part of it, that's very well established, and beating down, attempts through zoning to control form of ownership, that's also pretty well established in Massachusetts law. And I think sometimes the municipalities, if they've got clever lawyers, it's, well, look, maybe a court will invalidate it, but until a court says it's invalid, we'll get away with it. I hope that doesn't sound too cynical, but in private commerce and with municipalities, I see that sort of thing all the time. Thank you.
Great. That answers that question.
Yeah, and kind of just to touch on the last 2 here, updates on the state financial incentive program. We don't have updates on that, correct? I think, but they're coming. Things are coming. Question mark.
Yeah, I'm not well versed yet on tax credit or other programs that are coming
Yeah, all the programs as they become available and we have access to them. Everything, all
It'll be in
programs
our
up on
newsletter.
that website.
Yeah.
That I put in the chat there. And then the final question: I have used block grants for home improvements in the past. Would this affect future grants? Do you know?
I think that's on a case-by-case basis by whomever's issuing the grants. They might have some parameters in place. Sorry to not be more clear for you and have a concise answer, but I do think that would be on a case-by-case basis.
Yes. I'm sorry, I just got a long question sent in. I'm gonna ask it. I'm gonna ask it. This person has been participating a lot, and you may know them, but the law seems to say, quoted from an article, that size limitations, the ADU cannot exceed 900 square feet or 50% of the size of the primary dwelling, whichever is smaller. This ensures that the ADU remains a secondary subordinate structure on the property. If I put a 1,200 square foot unit on my property, am I therefore disqualified from some of these funding streams because it technically isn't an ADU due to size?
I think to kick that off, yes. How would you put a 1,200 square foot unit if the laws? Go ahead, Charlotte.
Illegally, right? So that would be a problem from a financing perspective. If you were coming in and asking us to finance a 1,200 square foot accessory dwelling unit, and we knew the town only allowed 9, that's not something we would be able to accommodate unless you, again, and that's why we have the building permits required for extending the financing to make sure what you're building is legal and approved by your town and municipality.
And when we have folks approach us with, these questions on size and what your needs are, we start to use our experience in small design, like what really are your needs? When we're talking about that 900 or 50%, it's gross floor area. So we're typically talking like what's inside of our walls. So, hey, maybe you're capped at 900, but you want that screen porch, that inside outside space. Or folks are talking about garages or other spaces. And so that's where, hey, we are following the letter of the law. What are your needs with that 1,200 square feet? And is there a way to make it work? To not only, meet the letter of the law, but also if you need to finance, make sure that it's all above board.
And by the way, I'm looking at the former definition of ADU, which referred to 1/2 the floor area of the principal dwelling or 900 square feet. That's what the question said. But the new legislation is not larger in gross floor area than 1/2 the gross floor area of the principal dwelling or 900 square feet, whichever is smaller. Gross floor area, and I've looked at this, I'd have to brush up on it, but my recollection is, for example, gross floor area includes a basement. And so even if you've got, say, a 1960s 900 and some square foot bungalow, you can probably still do the 900 square feet, because my understanding is generally the ADU is going to be on a slab. The ADU isn't going to have a basement. Am I making sense? I mean, you don't have the same gross area issue with and it does say gross floor. Okay, am I making sense, Tim?
Yeah, and the nuance there is when the governor signed this in August, there was this language that was proposed, and that has been worked on by the state. And they just recently, I can't quote the date, provided this guidance that Michael is quoting. So that final language that will go into effect is what Michael just quoted. And the nuance there within the zoning is, how do you define this gross floor area? And does it include a basement or not? Because then, hey, if I have a 1,200 square foot ranch on a full basement, I now have double that if I'm counting basements in my gross floor area count. So you'd have no problem meeting that 900 square feet maximum requirement. But I'd reach out to us at Backyard ADUs to look at your case by case basis, so we could help you figure out what size it could be.
I threw some more resources in the chat too. Back to our YouTube channel, we did do, it was kind of not long after it had passed, so some things may be different now, but we do have our, and Michael, you were on this one too, I think.
Yeah, and I would caveat that the language has changed, so you can go back and watch our webinar on that, but that new language is in place, so do reach out to us on that.
And then I put the fact sheet from the website from the Affordable Homes Act there as well, but numbers are dwindling, and we thank all of you who are still here. But this is great.
Yeah, want to thank you, Jim and Charlotte and Michael, for lending us your time and your expertise tonight. It's really an exciting time in the world of ADUs and helping address the housing crisis. And it's a team sport. It takes everyone in the room to make it happen. So thank you guys for being here tonight.
Thank you.
Thank you. Always great.
Thank you. Thank you, April.
Bye, everyone.
Bye.
Bye-bye.